Welcome back to the channel, everybody. Listen, they're all doing this at the same time. How is that possible if it's not rigged? If they're not all in on it, who is they? The US, any of these global systems. But right now, I'm just going to give you this example because of these articles. We're about to jump into some very deep information. All right. So the US, France, who else is this here? The public aspect, the private aspect, the banks, the creditors, they're all in on it. And I have to say that because they're painting the picture that they're not. Now, what is it? The overall message here is that the system is being rigged for collapse, in my humble opinion, so that there can be a massive profiting off of the new financial system. Notice the proliferation and advancement of the new financial system at the same time. The rapid advancement of every possible thing. We're going to get into some. I'm going to provide specificity. The rapid advancement of everything possible that could take the systems down. You believe that? Do you believe that that's a mistake? There are no coincidences. I don't believe in any, especially here. The system. I want to say this first. Let me posit this first because I think this thought is going to help everyone glue this together. We're going to jump into some serious things. Don't worry about it. We're going to get there. Don't worry. But this is necessary. I continuously go back to the few articles we covered where the banks are pointing the fingers at the non-banking financial institutions. OK, and they blame them for a lot of things. And I said what? I said they're wearing them like a mask. The only reason you don't hear the NBFI say anything, because if the NBFIs go down, the banks are going to have a problem. They may go down. Banks go down, the NBFI is definitely going to have a problem. They're like this. Don't let them convince you otherwise. So we need to be paying. Look, if people want to profit off of these things, they want to know how high the price can really go and how deep the ties really go between these two systems and between all the connections in the legacy system to an explosion in price. You have to know this. You have to be looking at the NBFIs as well as the banks. They go down, gold skyrockets, XRP skyrockets, Bitcoin will skyrocket, period. For a myriad of different reasons. In my humble opinion, not financial advice. No, I don't need you to agree with me. I'm not here to convince you of anything. I'm just presenting as I'm about to do. So if that's the case, folks, if what I'm saying is not the case, by the way, if you like this type of content, take those powerful hands, hit that like button. All right. If what I'm saying is not as significant as I believe it to be, and I know what I see, I believe myself. I've been combing over this research. Why is this happening? Listen to this. This is coming from an executive. Serious business. He's not joking around, and he's only confirming what we already researched. If you saw those members only videos, you know we've been over certain things we went much deeper, but he's touching lightly on something, the tip of the iceberg. This executive says this: buyout executive warns private equity push into U.S. savings risks bailouts. Folks, in that one sentence, people are not understanding. He just gave you a golden egg. Wait a minute. Let me put something out there that's real tasty for you, delectable. If they cannot receive funds from banks who already have deposit erosion, account erosion, deposit flight, they're having liquidity problems. They're having this little battle with the Fed. So who knows how that's going to go? The Fed is also, we know, is playing favorites. If they can't rely on the bailouts that come from their liquidity backstops, that's the verbiage they use. Liquidity backstops. That's the banks. That's the banks. Who are themselves I told people I don't know. Some people don't listen to me. That's okay. You don't have to. But what I'm giving you are facts. What I'm giving you is what any paid researcher would have to give you if they're worth their salt. Don't believe the numbers. They're putting out the numbers. It's fake. They're lies. If you research it, you're going to see the real information. So they put out the numbers. They say the banks are up this year. They're doing great this year. Look at this capital they brought in, not showing you everything that offsets that. It will be a nightmare, the truth. To those who don't want to know the truth, to those who seek the truth, that's a beautiful thing. Like, yes, I want to know that. They're not doing well. The illusion is what causes the confusion. I like that. I might use that again. The illusion causes the confusion. It flows. It's the truth. I showed the numbers. If they cannot provide the bailouts for them, the liquidity for them, and yet, so we see that this pullback of the ability to rescue this the private equity push, this private equity. Wouldn't it make sense that they would get in deep with a liquidity token, of which all of them not only use what they have, because they're going to pour, they have been pouring their capital into liquidity tokens like XRP, etc., by acquiring them, holding them in treasuries, and even their exactions on furthering their plans into the future and bringing more businesses into DLT and crypto, as has been admitted by Ripple as well as BlackRock. What do you think that means? Who are the top cryptos? Who's going to get that capital? You mean the top ones like XRP, Chainlink, Hedera, etc.? Those ones that are popular, well-known, have all the business connections. Of course, capital is going to go to them. Not all of it, but a massive amount is. That's just the way that it goes. That's like saying someone else that more people are going to shop at some store that they don't know about, is new on the scene, as opposed to Amazon. Like, stop playing. Like Ripple, Hedera, Chainlink, Cardano, these are the Amazon. Like, they're well known is what I mean. I don't mean they're as big and powerful as Amazon. Not yet. They will surpass them. I firmly believe that. But I do. Say what you want. I was there when Amazon was nothing. I was around. I learned. I saw them getting traded. I saw when they were not profitable. I lived through all of that. Okay, so I know how fast things can accelerate. Oh my, what 20 years can do. 20 years a lot for some people. 20 years not a lot for others. I'm not as young as I appear. So that's why I say that. But so yeah, you would need a liquidity token. You need RWA, because with RWA you get to move the liquidity, the value of all that stuff on chain. You can use that liquidity without actually moving the item. So it gives you liquidity to pull from in the event that you need it, without having to worry about an FDIC or a Fed or banks. If you're an NBFI, non-banking financial institution, private equity, whatever. Same thing with the banks. Everyone's looking at this new independent way to have a liquidity pool, to have a bailout pool, a liquidity cushion. They took that. I used that 4 years ago. I just always say liquidity cushion, liquidity cushion. Now you have the experts saying liquidity cushion. We've been on the right track the entire time. This is serious business. Some videos we're having more fun. Some videos are more serious. This is a serious one. We didn't even get into the information. Don't worry. I'm going to give you some powerful stuff here. Look. So this is what he's warning. Move to widen access comes with high fees, average returns, and ample dollops of additional risk. Now, pay attention. This is coming from Olympus Partners founder. Notice that. He says high fees. Who cares about that? Get that out of here. But although that's another reason why we're going to dominate in all of these industries. The financial industry is ripe with entities and individuals taking advantage of each other, charging excessive amount of fees. We know that. But we DLT is all about lowering fees. We're going to dominate them in that aspect as well. But notice he gets very, very opaque. He doesn't, my apologies, I beg your findest pardon. He doesn't elaborate when it comes to ample dollops of additional risk. Why? You ever notice that? They don't, see, he wants to touch on this because there's a problem. They don't want their companies to go down, to collapse. Although what's happening right now, they're going to have a problem. So they want to speak about this and sort of, like he said, I'm warning, but you're warning in a way that's vague and opaque. Why? That's because there's a part they're afraid to put out there. They want to, but they can't. But they know if they put this out there, researchers like myself, never downplay yourself, by the way. I told you, you'd be surprised who watches your stuff, your videos. I didn't say mine, yours. I know from personal experience. So they put it out there so people like you and I will speak about it. They know we make waves. We do. No arrogance in it whatsoever. All humility. I say that with all humility. That's why they put it out there. They want someone to speak about it, to talk about it. And we're going to now. Let's jump in here, folks. Here we go. You ready? Look at this. Everything that they're doing, folks, is like a stick of dynamite in the system. They want the collapse. I'm convinced of it, but I can't say absolutely because I'm not sitting in a meeting exactly with people whispering, hey, you ready for the collapse? No, I'm not. So I can't say in an absolutist way. I don't want to. But every piece of evidence leans us towards that understanding, while, once again, they're raising up the new financial system. Oh, there's going to be crypto banks, stable coins. We have a digital asset reserves and Ripple. We have so many central banks, some we didn't even name. Right. And then just all of these different bank connections, corridors are all around the world. I see this setup. I know the setup, which means trillions of dollars are coming in. But let me read this to you, okay? So private equity, U.S. Risk and U.S. savings. Folks, if you think they're not connected to the banks, this is the part I really wanted to show you. Banks are heavily involved in the financing of the underlying of private equity deals. I remember I was just showing all the different connections. Here we go again. The banks are involved. Don't let them trick you. And they're at risk because of this, amidst all their other problems. Why is this being allowed to exacerbate? You don't think there's a reason that they're allowing this? You believe they're just incompetent? They could be, two things could be true at one time, right? They're both opposite sides or a different aspect of the singular truth. Maybe they're both incompetent and they're rigging the system. Banks are heavily involved in the financing of the underlying PE deals, private equity, underwriting, and syndication. Banks often underwrite the initial debt, known as leveraged loans, used to fund PE buyouts. While much of this debt is sold off to non-bank entities, non-banking financial institutions like collateralized loan obligations, CLOs, and private credit funds, banks frequently hold a portion on their balance sheets. If PE-owned companies, which are often highly leveraged, fail due to the risk that are involved with such, those leveraged loans default. This directly causes credit losses for any bank holding the debt, eroding the bank's capital, and they already have problems. Myriad problems. Google search, people. Google search everything that I'm saying. I want you to question it. I want you to look it up. The power is in your hands. Now, let's keep going. Doesn't it feel good to be powerful? Yes, it does. It continues. Banks provide liquidity backstops. You don't say. The banks provide liquidity. I know that's wild these days, in our early days, to think banks and they can't provide the proper liquidity. They're not safe with liquidity. When I was younger, that would be a hard pill to swallow. You'd be like, wait, you just believe everything you're reading about the financial institutions. Now in my older years, 100% you better question everything that they have going on. Look at those numbers from 2 to 3 different sources. As a matter of fact, no, I don't trust the banks whatsoever. But let's keep going. Just a little tidbit, a little thought. Banks extend substantial committed credit lines called subscription credit facilities or similar liquidity lines to PE/PC funds themselves. These funds rely on these lines for short-term financing to bridge the time between drawing down capital from their limited partners. All right, let's go here. Wait. Bear with me one moment. There was something else I wanted to give you. All right, let's just discuss a little bit of the risk here a little bit more. The risk is especially deleterious because much of the activity is housed in the non-banking financial sector, PEPC, insurance firms, which operates with far less regulatory scrutiny. I want you to keep that in mind because of the next article, which is just as potent, if not more potent than this one. You can believe that, right? Yes, I got some good stuff for you today. Once again, hit that like button if you haven't already. The power is yours. Boom. And it says, this lack of transparency, they're talking about regulatory scrutiny and less regulatory regulations, when that's exactly what the banks are crying out for right now. Less regulations is what's happening right now. Don't worry, we're going to get into it in that second article. They're rigging the entire system. I have 2 or 3 more articles. Matter of fact, we'll see how much we get through today. It says, and regulators to quantify their true exposure to the high leverage and illiquidity risks building up in the private markets, folks. Therefore, while the failures, if any failures ever occur, may begin outside the traditional banking sector, the deep financial and credit connections mean banks serve as the ultimate shock absorber and potentially the next victim. Now, we had to go through all of that. It was necessary, highly necessary. You make it to this point in the video because now we're going to get into the good stuff. Look at this. They're all doing this at the same time. See how it comes back full circle to the beginning of the video? They're all doing it at the same time. Most people didn't make it this far. They won't know, but you do. Hit that like button. You know. Listen to this. This next two articles, folks, and I may blend them together to save some time. This one is titled, "The U.S. is Deregulating Banks. Will the Rest of the World?" Now, we already know the U.S. is doing this. We're going to delve into that a little bit, the negatives of such, because that's wild. Why would you do such a thing? The banks were already violating regulations. We saw big banks get taken to court last year, multiples of them. The ones that they say everybody should trust were taken to court by was it by the SEC? I believe it was by the SEC. The articles are still up. The videos are still up for anybody that can find them. But they're on there in the ocean of videos. They're still there as proof. But those are the same ones that were in violation of regulations, taking risks. This is what the point. That's the point of what I'm saying. So how much more risk are they going to take when they're deregulated? Wait. Let me go. The U.S. is deregulating banks, but this is the part that's interesting. Will the rest of the world? They are. And that's what's the real tell here. Why are they all doing the same thing at the same time? They're all in on it. And these are all areas where bank coins have proliferated. Bank coin companies have dominated. And they're just getting started. They're all hoping to profit and benefit from the new financial system, in my humble opinion. They know it. That's why they keep kicking the bank coins down, right? They don't allow too many people to get too happy about them before they say something wild and crazy about them. Try to erroneously slap down the truth about them when anyone can read their white papers. Anyone. Then look at this. So that's that article. We're going to delve into it. Don't worry. Then this article is titled France. All of this happening at the same time. France sees scope to scrap some bank regulatory capital buffers. They're all loosening up the belts of systems that need to be kept tight. Systems that were doing wrong before, now with looser regulations, you don't believe they're going to do more wrong with less oversight, less regulation? What? How does this help anything? No, it doesn't help anything. I mean, look, to each his own. Maybe you see something I don't. I can respect that. Maybe you don't agree with me. I can respect that. Folks, no, it makes things worse, in my humble opinion. All right, I only speak for myself. All right, now let's go back. Wait. So the U.S. deregulating banks. We have this executive warning about private equity and et cetera, push into U.S. savings, which we didn't even go that deeply into that. And we have France sees scope to scrap some bank regulatory buffers, regulatory capital buffers. Unbelievable. People don't see what's coming. Then there's no reason, once you know all of this, to wonder why they're all protecting themselves with gold. I used to ask the question quite often, what are they protecting themselves from, folks, huh? Gold is a protective asset. Why are they all so heavy? It's not just the central banks heavy, the commercial banks, the high value individuals. Everybody's stacking gold. Why? And now silver. Why? And they're going to continue. This is why we're getting these predictions of $5,000 gold from all these large institutions. Look that up. Google search, Yahoo search. I learned that Yahoo still has a search. Like they keep on sending my computer back to that. And I'm like, oh yeah, I forgot Yahoo is still around more than just Yahoo Finance. Usually my mind goes to Google search and Bing search. But yes, Yahoo is still there. I never liked Yahoo that much. So I didn't. I was Alta Vista. I used Alta Vista in the old days. How many people remember that? All right, let's go here. Let me not talk too much off of the article today. I'm going to give you all of this. All right. Let's see. Bear with me one moment, folks. Bank deregulation. That's what I was looking for. Okay, here we go. So, bank deregulation. There's so many. First thing I think about is the liquidity problems they're having, and they are significant. Also, possibly more risk taking, especially in the how could I phrase it? In the aspect of them going away from the Fed for higher yields. That's the one thing people have to understand. Oh, that's another aspect I didn't even think about. The staking and lending. Once again, I spoke about it before, but we have to try to keep that in mind. At least I did. I said I'm bringing you into it like you forgot. No, I forgot. But I have to try to remember that. Because of higher yield, they're going to go wild with staking. Hence why I believe you have so much going on surrounding the XRPL with native staking. Why? The same reason that the XRPL and David Schwartz and everybody's talking about, we're going to step up our security and all that. It's for the banks. The banks want staking. They want native staking. They don't want to go through third parties or any of that. And Ripple, looking at this situation, is saying, whatever it takes to get those trillions here easier, do it. That's what they're doing. This is not for regular people. Why didn't they rush it before? The regular people have been supporting them since forever. Why? Because it's not about the regular people. Guess who's in? Kaboom. Guess who stepped in the room? The banks. So now, all of a sudden, more security, make everything better, faster, let's look into native staking a little bit more seriously. Right, because the banks are coming. The time is rapidly approaching. The golden age door creaks that much further open. Okay, but let's get into this information here. So, possible problems from bank deregulation, liquidity problem, bank runs, risk taking, and collapses. So, easing capital or liquidity requirements frees up funds for banks, is what they claim. Banks are financially incentivized to deploy this freed up capital. The risk, reduced capital buffers, and this applies to France as well. Reduced capital buffers means banks have less of a cushion to absorb unexpected losses. Why would you do that? What do they do? Can you please tell me, how is this good? How is this good? And yes, they can always change their mind. Yes, they can do. I know that. But this is what they're saying as of now, okay? So reduced capital buffers means banks have less of a cushion to absorb unexpected losses. This increases the likelihood of an institution failing from a bad bet. Folks, I'm trying my best. Folks, do you believe it's not rigged? Please tell me in your most eloquent and intellectual way why. I'll hear you out. I'll read it. You know it. All right. I can't see every comment. All right, let me just put that out. I'm one person. YouTube feeds you every comment all together from every video since your first video. At least that's how it appears on my thing. So I can't see everything, but I see a good amount. I see a pretty good amount. People know. So just tell me, you don't think it's rigged? Why? All right, to each his own. But look at that. Look, it increases the likelihood of an institution failing. Unless you want them to fail, why would you do this? So it says, let's continue on. So deregulation often involves loosening rules that require banks to hold highly liquid, safe assets like U.S. Treasuries. The U.S. Treasury is a problem. I mean, no disrespect. I don't trust Scott Bessent. It says, or simplifying stress tests. For example, lowering the supplementary leverage ratio, SLR, we discussed that before in the members only section, can reduce the requirement for large banks to hold capital against low risk assets like treasuries. Oh my word. Low risk asset, right? It's a low risk asset. Are you looking at every possible way that treasuries are can I say wielded, are being utilized? All right. Let me ask you a question. Does it appear treasuries have been weaponized? I'm just asking a question. Huh? Have you been keeping up with what's going on with them? Have they been weaponized? If not, then why are they being used in a particular way to erode what another comparable entity is doing? Huh? Why are they doing that? All right, let's keep, but they're low risk though, even though they're risking the health of the entirety of the system, but they're low risk. Yeah, right. Okay. See, they can fool many people, but they cannot fool everyone. But let's keep going. It says, while proponents argue that this allows for more lending. All right. Right. Because that's going to solve something. All right. Okay. Let's continue on. Critics, I disagree with it, obviously. I have a variety of ways to keep it interesting when I disagree so that I don't get bored. Okay. Critics worry it reduces the amount of high quality, readily available assets a bank hold. Critics worry. Critics are correct. What do you mean worry? That's a fact. You removed it. If they don't have it, they've removed that aspect. And so it's not there. Why does everyone protect the banks? Well, I already know the question that the banks have power. They can take action against you. I already know. Unbelievable. You see them. And this is why a lot of people don't touch on this type of information. Let's keep going. So if a bank becomes known for taking excessive risk, or if the overall economic environment sours, how's the economic environment doing currently? Depositors, who's the depositors? Depositors may fear the bank cannot meet its obligations, a reduced liquidity buffer, but they don't know. See, and this is the problem with information. I'm a little excited. I had some pecan pie before I got on camera. So I got a little energy. Let me be excited. This is when I realize I think I do my best. Now, reduced liquidity buffer, especially for mid-sized banks, makes them more susceptible to a modern-day bank run. So why would you do this if you don't want the system to possibly collapse? And there's no guarantee it will. But this definitely heightens the possibility of such, does it not? We're on to something huge. It's time to accept that you are a part of history. We are making history. We're the modern age Sherlock Holmes. We are the modern day Socrates. They don't like it. It don't matter. It doesn't matter what they like. They can't stop legends. That's you. I'm not gonna say it's me. Wherever I fall is wherever I fall in history is wherever I fall. Whatever. Let the people build a monument if they want for you. Don't build one for yourself. That's how you got to approach that. But we're making history, folks. Depositors may fear the bank cannot meet its obligations. Okay, so a modern day bank run where deposits are withdrawn electronically. So that's what I wanted to touch on. The reduced liquidity buffer. The people don't know. They don't tell the people. They don't cover it. Mainstream doesn't cover it. Nobody wants to touch this. This doesn't get your clicks and views unless you guys click the like button. Then maybe people will see it, or you guys share the video. You don't have to, but that's nice. But let's say even if you want to take this information, you do a Google search, take this information raw from the website itself, wherever it is. And mostly you're going to get this from governmental websites. That's the wildest part. The Fed, etc. That's where you're going to get this. And you send it to your people and let them know, hey, go read this Fed document real quick. Then that's the only way people are going to know. So how could there be a bank run right now unless mainstream media covers it? And that's the dangerous part, because as they're setting all of this up and allowing it to become worse anytime they want, since they control the mainstream media, they can say, hey, cover this information, and they can orchestrate the run, which would be based on all factual information, because they are the ones who instituted all of these different sticks of dynamite into the system. Then they profit on the downfall of that system. The downfall of the legacy system justifies their rapid implementation and utilization of all the things in the new financial system that they used to convince the public were bad. Now, no, not bad. Now it's good. They've been washing the minds of the people with crypto is good now. It's safe. We took a look at it. We forced them to change, even though they didn't. But they'll feed that to the public. The public will buy it. They will profit wildly. So when the banks come to them and say, hey, listen, you want us to stake your crypto for you? You want us to lend your crypto for you? Sure. Look at this percentage you get. It's way higher than your savings accounts percentage. And people will say, oh, my goodness, yes, I would love that. Not knowing that what the bank showed them is only a piece. The bank is taking a major part of that percentage of yield. And yet, and still, crypto is so great, the yield that the people will get is great still. Could be greater, but the people won't know that. They'll go through the bank. This is all set up for them to explode the prices, because they know, and you and I know, there's not going to be a lot of people into the bank coins by the time this really, really pops off. We know it's just a small group of people. In my humble opinion, they know that, so they don't care about us. They're going to explode those prices because they're the prime, they're the foremost beneficiary of that explosion in price. It's theirs. It was made for them. That's how they feel. It's coming. So they're trying to push this downfall of the legacy system faster than what I think most of us would expect. So it continues. We could go deep. There's so much here, folks. So as an example, the deregulation of the 1980s and the period leading up to the 2008 global financial crisis are often cited as prime examples where reduced oversight led to a dramatic rise in systemic risk. Exactly. That's what I was trying to convey. They put it in a very good way here. So it says here, if a large interconnected financial institution fails due to excessive risk taking, why would they not take more risk? You're deregulating. You're not even going to be watching. They were taking risks before with all the regulations. I don't understand this method. The damage is not contained to that one bank. It can trigger a cascade of failures across the system, a domino effect, or what they call contagion. Right. So, and then, of course, the whole will the rest of the world follow aspect. Europe and Asia, these regions are generally wary of sweeping deregulatory shift. It doesn't matter. That is not what matters. Because if we're being truthful, there's so much corruption and risk taking. This is why you have the problems that you're having in China. They were just talking about doing more stimulus after they did stimulus last year. Was it September or December? They did stimulus last winter. That's not taken into their commercial real estate problems. Japan, what's going on in Japan right now? How are they looking? Right. UK, how's the UK doing? Europe, how's the European financial system doing right now? Do we need to talk about the US? I don't think we do. So Europe and Asia, it's not about them following and deregulation. It's more so that, first of all, there's overlapping and there's connectedness in all of these systems. That's firstly. My apologies. I'm trying to get my thoughts together. I'm a little bit tired. I did have some pie. It gave me energy at the same time. I'm like, oh my goodness. Been a long week. I just want to relax after this. It's not about them following in the US's footsteps. They've already done that. It's about all of these systems having the exact same massive problems and waving in the wind and collapses there's collapses being set up, it appears. Problems being exacerbated. And we're asking why. And when we ask why, it leads us back to gold. It leads us back to crypto and all of these places, United Kingdom. I mean, look. All right. So now let me get a little bit of Bitcoin news in here. OK, a little bit of Bitcoin news in. I wanted to go deeper with that, but I just don't have enough time. My apologies, folks. But I gave you as much as I could. I hope you look all of that up. Look, those articles just came out last few days. Look those articles up. Here we go. Bitcoin in modest rally mode after Thanksgiving as December Fed rate gets locked in. Modest rally mode. What's going on with Bitcoin? Let me check. I did not check the price today. I'm not going to tell you something I didn't do, but if I did check it out, I will tell you what it was. Let's see. Bitcoin current price. We're going to do a Google search, of course. All right. All right. So Bitcoin is at $91,240.17 right now. It's in red. Not bad. Not bad. That's resilience. That's resilience, right? It was down lower earlier in the day at $90,574. And when was this here? It went to a high at about 2:30 p.m. is saying here of $92,408.76. Yeah, so Bitcoin's looking good in my humble opinion. So let's find out. Now let's go back to the article and find out what they have to say. So this is what it says. Bullet points. Haven't done bullet points in a while, huh? Bitcoin is continuing the Thanksgiving week rally on Friday, rising back to as high as $93,000 before pulling back a bit. Very good, Bitcoin. Like I said, I'm not worried about Bitcoin at all. Then they're talking about something else. I hate when they try to squeeze in some other stuff I don't know about. Like they use Bitcoin to reel you in. You ever notice that in these articles? Then they start talking about other crypto, like they're trying to like sell it on us. Like, what about this crypto? I don't know what that is. But hey, it's your article, not mine, right? Continuing a rally that comes alongside a sharp rise in odds of a Federal Reserve rate cut in early December, Bitcoin, which is showing $91,191.38. Of course, it's all types of volatility in there right currently. It says rose to $93,000 in early U.S. trading hours on Friday. At press time, Bitcoin had pulled back to $92,500, still up 2% over the past 24 hours, and now ahead about 15% since a panicky bottom of $80,000 about 1 week ago. Yes, as I said, resilience. And it shows that what they're reporting from Sentiment and other professional organizations is true, that these companies are buying Bitcoin, but maybe they're nibbling. But they're buying Bitcoin. They're also buying other things like XRP, etc. This sort of lends credence to that that truth that they put out there. I'm gonna just say truth. You don't have to use the word truth. It says Bitcoin's reversal of fortune came alongside a massive 180-degree turn in investor expectations for a Fed rate cut in early December. A series of hawkish Fed speakers have previously whittled the odds of Fed easing to just about 30% earlier this month. Hold on. Folks, listen, is it a possibility? Let me read the rest of this and I'll give you my thoughts. It says, but as the central bank doves appear to have retaken control of the narrative, the odds shot back to 89%. Okay, let me say what I was going to say. Folks, with everything I've presented in the members only section, you've literally heard what the Fed said, correct? There is no way. I mean, if they don't do quantitative easing, if they don't do what they were saying they were going to do, folks, it's about to be a problem. They said it themselves. That's it. The numbers speak for themselves. I'm not talking about guesswork or any of that. The numbers speak for themselves. And we see what's going on with situations internally in the Fed, in the system. Those are facts. No one can get around, but most people don't know that. They're not going to look into that. So, we'll see what happens, but I just don't see them not doing such a rate cut. If they don't do it, there's some bigger questions we need to ask, because that means that they have 100% acquiesced to the downfall of the system, in my humble opinion. And that means that they're 100% in on the profiting of the new financial system and the downfall of the profiting of the fall of the legacy system, in my humble opinion. So we'll see. It'll tell us a lot whenever this occurs, this goes down. So odds shot back to 89%. All right, we're going to leave it there for today, folks. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, everybody, let's get to the money.